Welcome to Friday Finance Focus for the 23rd of November. Did you miss my report from last week? It seems my Friday Finance Focus from last week disappeared into the cloud after I attempted to upload it remotely. You can access that report at my blog section on my website at www.capitalfinancing.com.au. There is such a thing as too much teamwork from LinkedIn this week. Open plan offices and the use of messaging apps like Slack have encouraged always-on constant collaboration at work. But research from Harvard's Ethan Bernstein suggests that we develop more and better solutions to the problems when we take occasional breaks from the group so we can ponder on our own. Such intermittent collaboration strikes an ideal balance between working in isolation, which limits the quality of ideas, and constant group work, which limits the diversity of ideas. Here of the day from LinkedIn this week: failing at anything hurts, but sometimes leaders need to know when to give up, says Shake Shake founder and Union Square Hospitality Group CEO Danny Meyer. We, entrepreneurs, are equally responsible for balancing hope and reality and for knowing when no degree of optimism is going to overcome the underlying challenges. One of the issues that has addressed by the CBA Chief Executive Matt Comyn this week at the Royal Commission was that the Commonwealth Bank almost axed commissions paid to mortgage brokers but backed out for fear of competitors would take their market share. He told the Banking Royal Commission he wanted to scrap commissions, but it would certainly have been a high-risk move to try and reshape the industry by ourselves. Commissions have been pinpointed as drivers of unethical behaviour as it motivated mortgage brokers to pursue larger loans on behalf of customers. I interviewed Jonathan Chan from Livable Loans this week to get a broker's view of the industry. So John, what went on this week in the Royal Commission that may affect us?
Well, the main one was the Commonwealth Bank has come out and said that the best outcome for customers is for customers to actually pay a fee to brokers and to the branches themselves. So I guess we can comment on the intentions all we want, but ultimately what it comes down to is the facts. The facts is that more than half of mortgages done in Australia are by mortgage brokers. It means that the market recognizes the value of competition. They recognize that without having to pay a fee and without any barriers of moving between banks, that brokers actually do provide quote unquote the best choice. So whether fee for service comes into the market or not, it doesn't change the fact that we do provide great advice, we do provide choice, and we do weigh up the options. And that is something that if a fee for service will be a standard across the board, I think that people will still go to a broker.
Great. Look, thanks very much for your input. That was only a very brief information. You can certainly find more information through either afr.com or linkedin.com. There is a fair bit of chatter around this, so if you do a little bit of investigation, you can find it. Housing prices in Sydney and Melbourne will fall between 12 and 16% from peak to trough, forecasts HSBC. Sydney's now down 8% and Melbourne 5%, with the decline should be seen in a local context. New Zealand Chief Economist Paul Bloxham says. No more jet lag. Most Aussies are well acquainted with the walking zombie routine when they return from overseas holidays. Inventum Chief Executive Amantha Imber tells Life and Leisure she's got a workaround. Never nap. Oh yes, be sure to don AYO light therapy glasses. National Australia Bank is promoting a range of discounts and special offers as it prepares to roll out a program intended to improve the quality of financial information provided by loan applicants. NAB, an affiliate Home Loans, a non-bank mortgage provider, on Wednesday unveiled a broker interview guide which must be completed, signed and submitted by applicants and mortgage brokers for all personal, household and residential investment home loans. When asked why their small or medium companies failed, 11% of CEOs blame problems with family members or partners. The Australian Centre for Business Growth surveyed 650 CEOs, 134 of whom said they had experienced a business failure. Most blame lack of leadership and poor management. Others admitted being blindsided by fire, drought and regulatory changes, while more still said they simply had not understood the company's finances. The data was collected at the University of South Australia's Business School for over 4 years to 2018. Reserve Bank Governor Phil Lowe Tuesday warned that diminished popular trust in the idea that Australian living standards will continue to improve is fueling populist politics around the world and making it harder for politicians to implement the policy reforms needed to deal with the issues in the first place. The Australian Financial Review broadly agrees, but Australians still enjoy a prosperity matched by the people of few other nations, and the political task is not to pander to complaints that things aren't improving enough on their own accord, but to underline the home truth that to a larger extent we hold a prosperity in our own hands. Another idea of the day from LinkedIn this week: through collaboration, the private sector can decisively act for society's good, it says AXA Group CEO Thomas Bubel. Being complementary, amplifying public decisions, using our own instruments, playing on our strengths, that's how states, companies, citizens will tackle today's challenges together. The residential downturn will hit retail sales growth and create a meaningful downside risk for major malls landlords such as Century, Vicinity and GPT, City says. Ongoing household consumption will drive 3.1% economic growth next year, the OECD forecasts. That's it for this week's headlines. As usual, my news sources are from linkedin.com and afr.com, and you can follow us on Facebook at Capital Financing Australia and like the page to get the weekly Friday Finance Focus.